Whether you trade futures, stocks, or options, the Nasdaq is likely a market you trade. In today's video, I'll show you how, using our futures volatility box models, there's 3 simple things that you can look for when trying to buy the dip in Nasdaq. These 3 simple things I think are intuitive, but each has its own component involved with what information it provides. Now let's start with the daily time frame chart here first. We only know what price action looked like headed into today, and headed into today with yesterday's candle, yesterday's bullish activity, we even had a bullish slingshot. This gave us our bullish bias inside of the Nasdaq stemming from the daily time frame. Now we're looking for opportunities to quote unquote buy. That's what our bias is, to the long side. This is our futures volatility box models. We have 5 different models available. The scalper all the way up to what we call our doomsday conservative. And the whole idea with 5 models is to have 5 different ways to play what is the current day's volatility and how is that volatility changing. Now to start the morning, if I actually take you through the very beginning when the market opened, we started on our very first model. That's the scalper volatility box models. Now, all the way up through the first 30 minutes of the market activity, that model was being respected. Now comes the next hour, the 7 to 8 a.m. Pacific hour, and about, 6 minutes into that hour, you'll see price here breaks below these green clouds. That tells us that, hey, these scalper models are no longer being respected. We need to adapt to the new volatility, and that takes us to the next model in line, our aggressive volatility box models. Now, if you keep coming down the line, this is what price looked like. We then got a breach of our cyan lines right here. If you're new to our channel or unfamiliar with our volatility box setup, it's quite simple. We look for a breach of the cyan entry line, just like we see right here. And after we see that line, we want to see this edge signal confirmation on at least a 1-minute time frame chart. The edge signal is this green arrow, and that's our custom, in this case, oversold confirmation indicator, telling us that we're officially now in oversold territory. The catch is we want to see this green arrow before we've hit our first target or our stop, aka while the trade is still active. Now, if we keep coming down, you'll see that inside of the Nasdaq, almost right away from this wick, we bounced and we hit what was our first target without giving me an opportunity to really enter. And this wasn't a small trade either inside of the Nasdaq. This was going for nearly 65 points, and that's a fairly large risk trade inside of the Nasdaq. That's nearly $1,300 per contract, and that too took off without us. So now I'm just waiting for the next breach of our cyan entry lines, and I don't like retests here. I'm happy trading the next model, so if we had broken outside of the doomsday aggressive, I'd be happy trading the doomsday aggressive or conservative onwards in the same hour, but I'm not happy trading the same retest. I think that move has already happened. Now the next breach comes, and all I'm doing is still waiting and watching. Here, if we can break outside of the clouds, that's my sign that, hey, we can now switch models and again look for some new long side setups here. We've made a new low. I'm looking to buy the dip. Now we keep coming in, and the Nasdaq does in fact break outside of the clouds here. Now once we break outside of the clouds, same as before, we know now the aggressive models are not being respected. The aggressive did give a successful trade. It hit your T1 and went a really nice rally. I think this was almost a 107-point rally, more than the 65 points we were looking for. But now you'll see how quickly price reverses, and now we've broken outside of that same aggressive model. This means we can now start to look for some trades again. Now on the doomsday aggressive models, again, you'll see that price is broken outside of the clouds. This red candle was a large red candle. So even this model's broken. We come down the line and we're now on our conservative models. So far so good. We haven't yet even breached the cyan line here. Now I come into our next candle and we get the breach. This tells us one more time we have a volatility edge with our conservative volatility box models. And conservative also means that price has fallen a great deal. We've broken outside of 3 models up to this point. We really just have the conservative and doomsday conservative models, meaning 2 more left. I think we could feel comfortable taking a trade if we saw a reversal signal. Now, same as before, we see the breach, that's step 1, and step 2, we need to see this green arrow, but we need to see that happen down here. Now inside of the Nasdaq on this particular trade, we start to chop around, feels like we're building a base. We need to see that base being confirmed with the green arrow, which happens finally in this candle right here at 7:44 a.m. Pacific. Now once we see this green arrow, that tells us officially now that trades off of this model are valid. We're looking to purchase at the cyan entry line or better. That's an entry of 2143 or 453 or better. Our stop is outside of our volatility box models. And the risk on this particular trade inside of the Nasdaq was actually a little bit less than what we had before, 60 points compared to the 65 we had before. Our first target is that same 60 points, and our second target is the gray target line, which in the case of the Nasdaq was a home run trade we were going for of 194 points. So one more time, stop outside of the clouds to layer out the trade, entries at the cyan entry line. We're looking for this distance for our first target as well, which is 60 points here inside of the Nasdaq. And we have the home run trade target T2 at the other side's gray target line. Now, if you followed the day's activity, you of course know that the Nasdaq did not have an insane rally to close the day, but we instead did build a base and we made a nice move to our T1 target. This was a nice low stress trade, built a base. The most stress you had was this one minute candle where the red bar went slightly below the entry price. Again, still opportunities if you were looking to still make an entry in the position. All happened within the span of less than 10 minutes. So a nice little base where you could have built an entry, 1 and 2 oversold confirmation signals, and we made a move to the T1. Now after that happens, we move our stop to break even for all remaining contracts. So now the stop is at the cyan entry line. And if you, again, followed price action today inside of the Nasdaq, you know that we then had a sell-off into the close. And so right here is where the trade actually took off all the remaining break-even contracts. So this was just a T1 target, but hopefully through this entire process, you saw how we switched from the scalper to the aggressive, to the doomsday aggressive, to the conservative models, which is where the trade actually triggered inside of the Nasdaq. Now inside of the S&P, using all of this knowledge, for example, the S&P in this first leg down actually triggered the trade off of the aggressive volatility box models. We had price breach our cyan entry line, we had the edge signal, we had the opportunity to enter at the cyan entry line, and the stop inside of the S&P 500 for that first trade was about 12.75 points, which again, we ended up hitting but fell short of T2. So there you have it. I'm hoping the NASDAQ breakdown was a better walkthrough to give you an idea of the step-by-step, how you go from Model 1 all the way up to even Model 5 if we did touch it. And up in today's activity, we went all the way up to Model 4, which is where we found this buy the dip setup in that 7 to 8 a.m. Pacific hour. I hope you found today's video helpful. I'll leave a video which breaks down this fade setup in a little bit more detail in case you're curious, and how to use this futures volatility box a little bit more effectively with the fade setup. Take care, everyone. Good luck trading, and I'll see you in our next update.